Good morning and welcome to another live technical analysis session. As always, we are going to be starting with the euro against the US dollar. But actually, before we get into the euro against the US dollar, I would like to have a look into gold and oil prices based on the most recent developments that have occurred over the weekend. Essentially, we have seen, and in particular yesterday we saw Iran striking Israel in Tel Aviv, firing more than 100 missiles against the nation. And now there are some great concerns about a potential retaliation from Israel against Iran. So essentially, what has occurred is that Israel has launched a minimal intrusion into southern Lebanon, so essentially raids from its special forces, which has prompted a response from Iran. So Iran fired more than 100 missiles, some are saying 200, others 300, but the essence remains the same. Iran has struck Israel in Tel Aviv, and now we're anticipating the response from Israel. Now, with grave concern about the situation escalating and a potential regional war occurring in the Middle East, we may be seeing some safe haven inflows into gold's price. But if you look at today's daily candlestick, that does not appear to be the case. Yet yesterday, gold did appear to be on track to take aim for its all time high figure just above our R1 resistance level of 2,680. Now, let's drop into the 4 hour time frame for gold. It does appear to be retracing down to that S1 level of 2,640, which we have placed. Wouldn't be surprised to see it bouncing off S1 and then continuing higher. That is based on a geopolitical and from a more fundamental point of view. From a technical perspective, you can see that it has broken below our upwards moving trend line. That was on a 4 hour. So you can see on the daily as well, it broke below. The issue is on the 4 hour that the RSI is on that reading of 50, which does imply neutral market sentiment. That also coincides with the Bollinger Bands, which do appear to have narrowed or been flattening out, which might imply some low market volatility, or the upper and lower bound coinciding with our support and resistance level. So the precious metal may find support near that S1 and resistance near that R1 resistance level. So from a technical perspective on a 4 hour time frame, we could maintain a sideways bias. From a daily, however, you can see that the RSI is at 66, and that is to the bottom left of your screens, which does imply a bullish market sentiment, despite dropping from above 70, as it may have been overbought. Still, overall, bullish. Now, if this daily candle closes as it is currently, so that is a hammer formation, mm, it it might not be that good for the bulls. Might retrace lower, perhaps down to that S2 level before continuing higher. But if you take the fundamentals into account, I would opt for a bullish outlook for the precious metals price. And why is that? We have seen following the last time Iran struck Israel, Tel Aviv responded by striking directly into Iran. And I would expect that to be the case once again. The main concern that I have on what happened yesterday evening was the warning given by Iran to the US and its allies was about 30 minutes in advance. The prior um, the prior time upon which Iran struck Israel, they had given them days of warnings and allowed them to position their assets. Whereas yesterday it was simply a 30-minute notice, which does imply that Iran didn't really want Israel and its allies to intercept those missiles. The issue is that Israel warned Iran before that strike occurred that if anything occurred, so if the missile strike did indeed go through, they may target their oil refineries and nuclear facilities. I don't think I have to explain the consequences of striking a nuclear facility, but in terms of oil facilities, that could be a valid military target. It could cripple or perhaps impact Iran's economy. It could also push oil prices higher as supply chain issues may arise from those potential concerns. So we might be seeing inflows into oil and into the precious metal should Israel retaliate. And I do expect them to do so. So I would be maintaining an overall bullish outlook for the precious metal. Now, using a daily time frame, you can see that we have S1 at 2,640. One could slightly readjust that S1 level at 2,633. So that is our new S1 level. It's close to S2. But unfortunately, that's what we have currently, and we're a bit constrained on our support and resistance levels. For our one, I would keep it at 2,680. Our two potential resistance at 2,730. Then our three at 2,780. The way I'm seeing the precious metal move, wouldn't be surprised to see it reach to the mid, so an order block. Maybe for today it stays around, stays between S1 and R1, and then if Israel retaliates against Iran, could take aim for the all-time high and move higher. For now, if you are using the 4 hour time frame, I would be maintaining a relatively sideways bias between S1 and R1. So 2,633 and R1 at 2,680. From a more macro perspective, I would be bullish on the precious metals price. Looking at oil as well, WTI cash daily, we had placed at R1 level 71.40 and S1 at 64.60. Now, this downward moving trend line is intact, but you can see that the RSI has broken above 50, which might imply a shift from a bearish towards a more bullish outlook. If the daily candlestick rejects R1 and fails to break above, I would maintain a sideways bias. If it breaks above R1, then we would opt for a bullish outlook, but it would have to break above R1 and the downwards moving trend line, which was incepted roughly on the beginning of July. So ending on June, beginning July, we had a downwards moving trend line. If that is also violated, we would immediately switch towards a bullish outlook for the liquid gold's price. In terms of fundamentals, we note that the OPEC ministerial meeting is occurring today. There is no clear time set by Reuters, but if you look at investing, it places it at about 1 p.m. Local, so roughly 11 or 12 in the morning UK time. So that might be interesting for oil traders. What we would note is that it appears that Saudi wants to increase their oil production, so they may not commit to further oil production cuts, which could weigh on oil's price. But we're also seeing the geopolitical factors play a key role in oil's price, pushing it higher. So I think the fundamentals of a potential war in the Middle East between Iran and Israel might dominate the predominant narrative, despite the apparent easing of the oil supply. So that remains to be seen, but that is very interesting for oil traders. Technical view 52 at the RSI, testing R1. If it rejects it sideways, if it breaks above R1 and that downward swing trend line, we could opt for a bullish outlook for the commodity. Back to the euro against the US dollar. If you would like to view this from a geopolitical level, there was the vice presidential debate yesterday. It does appear that moderators might be giving um, candidate Vance an edge over the Democratic VP nominee Waltz. But in terms of the euro against the US dollar, it doesn't play that much of a role. For the euro against the US dollar, I would place more emphasis on the comments by Lagarde, which may imply that the bank may be preparing to cut in their October meeting. So, easing the financial conditions surrounding the EU economy. There are issues with France and Germany as well. Look at Germany's manufacturing data, not that good. We have Volkswagen exiting. We have lower sales for Vember, for BMW, for Porsche, etc. So it does appear that one of the Eurozone's largest economies is struggling. So it would make sense if the ECB decides to cut more. On the other hand, we do have Fed Chair Powell. Now, the Fed cut by 50 basis points, but it is what we have been discussing for the past 2 weeks. The 50 basis point cut for me does not make sense if the US economy is resilient. Now, yesterday we had the ISM and S&P manufacturing PMI figures for the month of September. They were contradicting one another. The ISM came in lower than the prior reading, whereas the S&P figure came in higher than the prior reading, essentially implying that the manufacturing sector of the U.S. economy might be in a better might be in a better place than it was last month if you take the S&P figure, but that it might be worse off if you look at the ISM. But both figures are still in contraction territory. So the bigger picture is that the U.S. manufacturing sector continues to contract, which might be an issue. Now, the JOLTS job openings figure, however, for August came in better than expected, which might imply a resilient labor market. So attention turns to the ADP employment figure, which is set to be released later on today, And of course, it is NFP Friday. So NFP Friday will play a key role in the direction of the euro against the US dollar, USD JPY, GBP USD, USD CAD, Aussie, etc., etc., etc. So based on what we're seeing, I wouldn't be surprised if the euro against the US dollar opts for a more bearish outlook. So it's broken below that S1 level at 1.1110. Next potential target for the bears could be at 1.10, so 1.10. RSI has dropped below 50. It is close, but having dropped below might imply a shift in market sentiment from bullish towards bearish. I would maintain a bearish outlook for the particular pair. For a bearish outlook to continue, it would have to break below that new S1 level at 1.10. So this becomes R1. 1.12 becomes R2. Then 1.1325 becomes R3. And I think you all know where this is going. 1.10 becomes S1. 1.0915 becomes S2. And then we have already placed S3 at 1.079. So it becomes S2, and then bring this here. 1.0790. And that is S3. It's also broken below our upwards moving trend line. So that might be in itself applying a shift. I would maintain that bearish outlook down to S1. USD JPY. Now this R1 level of 143.45 has now been broken. Using the daily time frame, you can see that this was a doji indecision in the market, and then it decided to move in an upwards fashion. So we are maintaining a bullish outlook for the particular pair, flipping R1 to become S1, and of course R2 now becomes R1, and so on. If I'm not mistaken, BOJ Governor Ueda appears to have implied a slower pace in terms of the BOJ hiking interest rates, which might be perceived as dovish in nature. Some of that might be weighing on the JPY. But given that the majority of the news that have been coming out are about Israel and Iran, I haven't really paid that much attention to the comments by Ueda earlier on today. So I will have to check that once we're done with our live. So R3 becomes R2. So we've left about $3 between R1 and R2, S1 and S2, and then S2 and S3. So it would make sense that we're looking for resistance near the 152 figure. 151.8, that is very nice. Look to the left of your screens, and I'll be drawing in a rectangle to make it easier. So as you can see on your screens, look at the price action to the left. Note on how many occasions the pair attempted to break above this resistance level. And when it managed to do so, it moved higher. And not only that, when it came back down to retrace, so gather buy orders and then move higher once again, it tested using this bearish candle's wick that this is indeed resistance turn to support, and then moved lower. And if that wasn't the confirmation, when the pair moved in a downwards fashion, this wick validated this once again as support. But when it broke below, it moved lower. So this is for me my R3, 151.880. Or 151.88. So we are using this as R3. And once again, simply look at the chart and look at the price action. Not magenta. It's a mistake. Should be red. So recap for USD JPY. Heavy resistance, support, support, broke below, move lower. This is R3. Now, with the price action here, one could argue that it has broken below our upwards moving trend line, and they would be correct. The RSI is at 50, which does imply neutral market sentiment. But the way I'm seeing this is that it might move higher. because of Fed Chair Powell's, I'd say, relatively hawkish remarks. And then if you look at the JOLTS figure, and then if the ADP confirms a resilient labor market, we might see the dollar gaining against its counterparts. For the euro in particular, we're seeing dovish sentiment emerging from the ECB. So it might be a more clear cut case of it being a bearish outlook for the particular pair. USD JPY would have to break above R1 for our bullish outlook to continue. We are seeing the formation of another upwards moving trend line, incepted on the 16th and then formed on the 30th of last month. But in terms of technical analysis, you need two touches for a trend line to be formed, and then you need the third for it to be validated. So I would like to see another touch validating this upwards moving trend line. But still, it is an upwards moving trend line. So that is it for the USD against the JPY. For cable, you can see that it is testing and has rested on that S1 level at 1.3260. We have S2 at 1.3030. And to make this easier, I will be adding a text label that this is GBP USD. You can see to the left of your screens. Maybe easier for you to follow along. We are keeping the support and resistance levels the same. Why? Resistance validated, support validated again. The RSI appears to be on a decline from 70 towards 50, which might imply that the bullish market sentiment might be fading away, and it might be the bear's turn to take over the pair's direction. For our bearish outlook to continue, it would have to break below S1. The next potential target would be S2 at 1.3030. Lower than that, we have S3 at 1.2890, and then you can see S4 on your screens at 1.2675. Now, if this daily candlestick doesn't break below S1, we would opt for a sideways bias. If we drop down to a 4-hour time frame, you can see that it is testing and validating S1. If it fails to break below, we would maintain a sideways bias. We might see a retracement back up to the mid-range between S1 and R1 before the pair continues in its descent. So this is cable, so GBP against the US dollar. We have placed our support and resistance levels. Moving on to the loonie. USD against the Canadian dollar. We are using once again a daily time frame. If you are using a 4-hour, this was very nice, moving in an upwards fashion. You had one, you had a second touch, let's say, higher highs and higher lows, broke below, switch, no longer bullish on this 4-hour time frame. Look at the RSI, close to 40, bearish outlook for the pair. Now, we did say that the dollar might be gaining against its counterparts, but we also and always have to remember that Canada is an oil exporting nation. As such, if you look at oil prices, which are moving higher, then demand for the Canadian dollar may also increase given its status as an oil exporting nation. So the Canadian dollar might be gaining against the US dollar, whereas the US dollar is gaining against the JPY, Euro, and the British pound. Now, I wouldn't be exactly bearish on a daily chart, but from a 4-hour perspective, I would be. And actually, this could be a lower high. So we had a lower low, lower high. We are bearish for the particular pair. So I stand corrected. But it needs to break below S1 at 1.3425. We're keeping our one at 1.3610. The reasoning is look at the Bollinger Bands, they have flattened out. It's close to that R1 level, so we might see the pair fluctuate between S1 and R1. Break below S1, immediately opting for a bearish outlook, potentially down to S2 at 1.3340. Lower than that, we have 1.3185. For the Aussie, despite it breaking and piercing that upward moving trend line, look how it is resting on that S1 level of 0.6870. Let's add that text label. USD. It is resting on S1. RSI is close to 60 and it is above 60. It is currently at 63, which does imply a bullish market sentiment. If it stays above S1, we could maintain a bullish outlook for the pair's direction. Now, the Aussie might be boosted from the stimulus packages from China's government, which is in an attempt to aid the country's ailing economy. So the more the Chinese government tries to support their domestic economy, then it might be implied that there might be an uptick in economic activity, and thus there may be an increase in demand for raw materials stemming from Australia. So for tomorrow, for Aussie traders, would be noting the country's trade balance, and in particular the exports rate. If it comes in higher than the prior reading, it may imply an increase in demand for raw materials stemming from Australia, which in turn may provide support for the Aussie. Whereas lower than last month's reading, reduction in demand could weigh on the Aussie. In terms of other financial releases, I would be placing more of an emphasis on the central bank speakers that we have today from both the ECB and the Fed. So Bowman is speaking later on today. ECB chief economist Lane, if I'm not mistaken, is speaking currently, so that might actually impact the euro. So we have a high number of central bank speakers today, which might influence a variety of pairs. Swissy staying in a sideways fashion between S1 and R1. No reason to change that. Now we are moving to the indexes. So I would like to see the Dow Jones, Intel looking nice, broken above R1, going to be testing that it is indeed resistance turn to support. Slightly bullish outlook, but I'm seeing a potential upwards moving trend line which was broken. Has to stay above R1 and break above R2. Microsoft, higher highs, might be forming a higher low. Sequential, lower highs. That is actually bad. Bearish for the company stock price. RSI is at 50. If it breaks below that upwards moving trend line, next target for me would be 402.10. Note the on balance volume. Look at the peaks, double top, lower, lower high, lower low, lower high, and now forming a lower low. That is bearish for me. But we are seeing that it is still an upward swing trend line, which is being validated. If it is also broken below, I would be opting for a bearish outlook. But even on a daily chart, bearish for Microsoft stock price, Nvidia resting on 115.90. Resistance turned to support, now acting as support. Let's look at ExxonMobil. ExxonMobil piercing R1, bullish for the company stock price, taking aim for 122.95. And we have the FTSE, the Nasdaq, not the Nasdaq, FTSE 100 daily chart, sideways bias between S1 and R1. So 8,180 and 8,330. IBM, Louis Vuitton breaking above R1. Looks very nice. Inverted hammer, reversal formation. Note that it is resting on our R1 level of 665.7. So once again, we were correct. Does appear to be so. If it moves higher, if it breaks below, then R1 might have to be readjusted. So our support, bullish outlook to continue, would have to break above R2 of 740.25. Lockheed Martin, of course, moving higher. Volkswagen testing S1 92.30. Cautiously optimistic, wouldn't be bullish for the company stock price just yet, but note it is testing RS1. It tried to test R2, failed to do so, came back down to S1. Google R1 163.98, failed to break above, managed to do so, tested that this is indeed now support. Next potential target could be at 173.63. Deutsche Bank moving in upwards fashion. JP Morgan. Oh, apologies. Nice. Okay. Now, there is a particular reason as to why I'm moving to the Dow Jones Industrial Index, so the US 30 or Dow Jones 30. There are port strikes in the US, and based on what it has been happening recently, it makes sense that this may have gone slightly under the radar. The strikes are the majority are happening, if I'm not mistaken, on the East Coast and the Gulf of Mexico. is the first strike since 1977, which is quite a long time. Now, the issue is overpay and the usual reasons as to why workers would go on a strike. Now, this might be very concerning for the US economy should it be prolonged. There is a possibility that the US president may intervene and ask workers to go back to essentially manning the ports. I think there is a clause somewhere or a law that would allow him to do so, but it doesn't appear to be the case. Now, the issue is it is election season, so if you're forcing people to stop striking, that is bad PR, especially for the incumbent party, which is the Democratic Party. And if you do so, you could lose votes to the potentially to the Republican Party. But if you allow it to continue for a prolonged period of time, then you might see a bit of an impact on the economy. So I would be bearish on the Dow Jones 30 purely on the strikes that I just mentioned before. The more it continues, the worse it could be for the US economy. We might see an increase in costs being passed on to consumers, and voila, that could actually uh, temporarily inflate the inflation readings for the US. That is a bit far fetched currently, but still, it is worth noting and monitoring. If you look at it from a technical point of view, if it breaks below 4,200, 4,100, excuse me, 41,926, we could maintain our bearish outlook, potentially down to 40,910, and then S3, 40,038, so 40,000 and some change. Bullish outlook would have to break above all-time high figure at 42,675. But the way I'm seeing it now, with the RSI dropping below 60, might imply that the bullish momentum is fading away, despite the 100 and 200 moving averages appear to be moving in an upwards fashion. In addition to the Bollinger Bands, I'm a bit concerned from a fundamental point. There is an upward swing trend line, but a more steeper one has been broken. As you can see, if it breaks below this level, would opt for a bearish outlook. So a bit of a concern and would be worth monitoring for the rest of the week. And let's see. Tesla moving in an upwards fashion, upwards moving trend line. The resistance we had placed has been broken. R2, 271.27. And once again, why is that the resistance level validated? Pierced above, closed on R1 and moved higher. So this is indeed resistance turned to support. Next target for me would be 271.27 for the company stock price. FTSE 100 moving in a sideways fashion would be slightly bearish on the Nasdaq. Nvidia 39 is below 40, bearish outlook, bullish on ExxonMobil. Intel sideways bias, cautiously optimistic. And then WTI cash, bullish from a fundamental point of view, sideways bias from a technical perspective. Euro USD, bearish technicals and fundamentals. GBP USD breaks below that S1, bearish. USD CAD, bearish technicals and fundamentals, but it needs to break below S1, otherwise sideways bias. Aussie bullish, and that depends on the trade data that is due to be released in tomorrow's Asian session. And with that, that does it for today. Thanks for tuning in, and we'll see you next time.
guys for waiting. Let's go ahead and get started. So, as per usual, before we get started, a risk warning as well as a disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. Disclaimer: the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. Okay, so I'm Melanie and I will be your presenter for today. I'm an investment analyst from Everest Fortune Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here is our agenda for today. We're just gonna look at the anatomy of a trade, followed by a recap of what we talked about last week, which was dynamic take profit as well as stop loss placement. And then we'll get into this week's content, which will be on break even as well as partial profit. Okay. So the anatomy of a trade consists of the basics, which are mainly entry, stop loss, as well as take profit. But of course, there are other parts as well that constitute a trade, such as your break even, partial profit, trading stop loss, as well as idea invalidation. So today we're only going to be talking about break even as well as partial profit. But if you are interested in trading stop as well as idea invalidation, stay tuned for next week as well as the following week's webinar, where we'll go through those in depth. Okay. So just a recap, we typically advise you to place your stop loss beyond a major resistance area and your take profit before a major resistance area. Okay, so that's just the general rule of things. Okay, so let's get into break even. So break even in trading refers to the point at which a trade reaches a level where the trader has neither made a profit nor suffered a loss. So it's basically the point where the cost of the trade, including fees and commissions, is equal to the price at which the trade was executed. Okay, so for example, if a trader buys a stock at $100, right, and sells it at $110, the trader has made a profit of $10. But on the other hand, if the trader buys a stock at $100 and sells it at $90, obviously they've suffered a loss of 10. However, if the stock is sold at 100, the trader has neither made a profit nor a loss, and the trade has reached its break-even point. Okay, so that's in the context of stocks, but we'll talk about the context of Forex in a little bit, but it's kind of the same idea. So break even is basically a concept in trading because it helps traders to determine the minimum price that they need to sell their trades in order to cover their costs as well as avoid a loss. Okay, so it can be helpful when determining when to close a trade and take the profits or cut losses altogether. Okay, so this is how it works. Okay, so break even is the level where you are in profit, which is over here, the first point. You're in profit, you recognize that there is a risk of reversal. So if you follow this based on the numbers, firstly, we have our entry, which is at this double swing high here, double swing high resistance over here, and then we are going in for a buy entry on this breakout of this resistance level. Okay, and we're hoping that price will push upwards towards our excuse me, towards our take profit level, which is this green area here. Okay, so we see price testing this area here, and then our break even is triggered at this break even level, which is just at this swing high resistance level. Okay, and then it reverses, it's triggered at this level, and then it reverses down. And that's where we modify our stop loss and move it from this original stop loss, which is way below over here, and we move it to our original entry level. Okay, and the reason for doing this is so that if price continues to rise, of course, we'll still get our profits, but if it reverses, we'll just take our profits and get out of the trade at break even. Okay, and you can see even though it did reverse off and was kind of heading towards our take profit, it's a good thing that ultimately we had placed our stop loss here because price did reverse and hit it back down to our entry and stop loss. So if we had left it at this stop loss level here, we would have made huge losses, whereas here we're just getting out at break even. Okay. Okay. So now let's talk a bit about partial profit. So partial profit is basically refers to the practice of closing only a portion of a trade when it reaches a certain profit target, while leaving the remaining position open in order to potentially capture further gains. So the idea behind partial profits is to lock in some of the gains while giving the remaining position room to potentially continue to move in the desired direction. So basically, it's typically used when there is a strong resistance area and you are unsure if price will rise to take your take profit. Okay, if we look at another example, but in this example, we're talking about stocks and shares. So if a trader buys 100 shares of a stock at $100 and the stock rises to 110, the trader might choose to sell only 50 shares, taking a partial profit of $500, which is $10 per share times 50. So the trader would then still have 50 shares that are now worth $550 and could potentially continue to make profits if the stock price continues to rise. Okay, so in the context of trading, it can help you to manage risk by allowing you to take some profits off of the table while leaving room for further gains. It can also help to improve the average price of a trade if you decide to add to the position later at a lower price. However, it's important to note that you should have a well-defined plan for how you manage partial profits, as leaving too much of a position open can increase exposure to risk. Okay, now let's look at example number one. Okay, firstly, we have our first support as our entry over here. And our first support is an overlap support, as you can see, with a couple of swing highs as well as swing lows testing that area. Okay, so that's a pretty significant area. So we see price bouncing off this area and we go in for our buy entry towards our take profit over here. Okay, looking at our Fibonacci, if you are not familiar with our Fibonacci techniques, I'll briefly go through them in a little bit when we look at our charts. But over here, we have a 38.2% Fibonacci retracement. So our starting point will be here, ending point here, 32.8, 38.2% Fibonacci retracement, and then which is in line with this swing low here. Okay, and we also have a 78.6% Fibonacci projection. So that would have 3 points, and you can kind of see the shape here. And our 78.6 lines up nicely with this swing low as well as the previous Fibonacci retracement. Okay, so we expect price to rise to our take profit here. Of course, we are hoping that price will rise to this swing high pullback resistance over here. But of course, there is a strong resistance at this Fibonacci confluence area, and there is a possibility that price might not be able to reach our take profit. Okay, so we see over here that price indeed did react off of the strong resistance area at this partial profit level. Okay, and it reversed off of it instead of heading towards our take profit. So in this case, we were able to get out of the trade with a little bit of profits, even though the trade didn't go according to how we planned it to. Okay, pretty straightforward, I think. Next, we have another example here. In this example, we have our entry level at this swing low support level. Okay, and this is our entry level and is in line with a 100% Fibonacci projection. Okay, so for Fibonacci projections, we are looking for kind of a lightning or flash shape. So like a lightning bolt shape. Okay, and you kind of see that over here if you follow the shape of our our Fibonacci trend lines, okay, as well as the tail of the lightning bolt over here. Okay, so it's in line with our 100% Fibonacci projection, and we are placing our stop loss right below this swing low support. Okay, and our take profit is at this swing high resistance here. But as you can see, it is quite a bit of a distance between our entry and take profit. So we identify a break even or partial profit area from this from our Fibonacci levels. So in this case, it's not only Fibonacci, we have Fibonacci coupled with a graphical analysis as well, because over here you see that we have two swing lows that line up nicely. So this makes it a pullback resistance level. Okay, and this pullback resistance is in line with 23.6% retracement, as well as another 38.2% Fibonacci retracement. Okay, so we have two levels lining up with a graphical level. Okay, so that makes it a pretty strong confluence area. Okay, so we've made this area our partial profit area or break even area, and we are expecting price to bounce up and bounce off of our entry, and head towards our break even. So you can see once price reached our break-even level, we were able to get out of the trade, but also be able to get a little bit of our profits. Okay. And in this case, because we are using a break-even as well, so not only did we get our partial profits, we are also moving our stop loss to our entry level, so that if it reverses off of this confluence area, we can get out at break-even. Okay, and you can see that that's exactly what it did. Okay, so this is the level in which it triggered our break even, basically telling us that there is a chance of reversal, and then when it's triggered, in other words, when price reverses off of it, then we can quickly move our stop loss to our entry so that we can get out of the trade at break even. Okay. Okay, that's all for my slides. Let me know if you guys have any questions, but now we're gonna use the remainder of the time to look at some charts. So if you guys have any requests for any charts, feel free to let me know in the chat. Okay, let me just pull out my charts. Okay, let's go ahead and take a look at gold first. Okay, so I, as per usual, I like to look at the higher time frames first so that we get an idea of where prices are headed towards. Okay, and you can see that price is pretty bullish over here. Okay, let's look at our daily time frame. Okay, our daily time frame is also clearly on an uptrend. Okay. Um, okay, now let's look at our 4-hour time frame. Okay, you can see that there is a very obvious uptrend here as well. Okay, let's see. So we have an ascending trend line here. Let's see if we have a trend channel. Okay. Okay, now let's go in with our support and resistance levels. Okay, so here is going to be my first resistance. Oh, wait just a second, let me connect my mouse. And then our first support, maybe just here. Okay, so we always want to try and pull it back as far as we can. And I'm going to place my second resistance here. Here, so firstly, I'm going to go in with a Fibonacci extension. Okay, so for Fibonacci extension, we're basically looking for this kind of shape. So this like tick, Nike tick shape. Okay, so this the tail of your tick has to exceed 100% of the head. So it's basically looks like this before you can use it. And we can see that price did reverse off of our first resistance, which is in line with our 161.8. So it doesn't have to line up exactly, just as long as it's kind of near that area, that's good enough. Or actually, let's take it from here. Okay. Okay. Next, I'm gonna go in with a retracement. So for retracements, we use these 5 levels. Okay, and I can see that my 38.2 lines up with my first support. So I'm just gonna keep that. Okay, now going in with a projection. So for projection, we use these 3 levels, and here I can see my 161 lines up. Actually, if we use this. So you should try your best to follow the shape of the chart as far as possible. Okay, and for extensions, just to recap, you are looking for kind of a lightning bolt shape, as I mentioned earlier. Okay, something like that. Okay. Mm, okay, we have another one here. Okay, I think that's all the levels that we have. Okay, so now let's go in with our indicators. So I'd like to start off with Ichimoku and MACD because at one glance, it tells you exactly what the signals are. Okay, so Ichimoku, you can see price moving above the cloud. So it follows our bullish signal. MACD is also giving us bullish. Okay, and then let's take a look at RSI. Um, Yeah, RSI is also moving in an ascending trend line. Let's take a look at Bollinger Bands. Okay, you can see over here that um that it's breaking out of the upper channel. So it's even though there is a reversal here, okay, we can expect price to continue pushing upwards. Okay, we are this reversal could be because of this confluence area here, okay, at our first resistance. So we see, as I mentioned earlier, we see that we want to pull back your lines or your levels as far as possible so that you can see how significant these levels are. And you can see that price has tested this level many times before. Okay, you can see here, managed to break out of it like once over here, okay, but still pretty strong resistance area. Okay, so it's not a surprise that we are seeing um price kind of respecting that area right now. Okay, but we're expecting it to still continue in this upward trend. Okay, so that's for gold. Let me know in the chat if you guys have any requests. In the meantime, let's take a look at euro. Okay, so on our weekly time frame, uh, okay, it does look like prices are rising recently. Okay, after this downtrend over here, there is a bit of an uptrend after the 9th of October. Okay, now let's take a look. Our daily time frame also pretty bullish. Okay, you can see. Okay, no. Let's see if we have a channel. Okay, no. Okay, but pretty bullish here as well. Now, definitely uptrend here on our 4-hour time frame. Okay, I don't think we have any trend lines or trend channels, so let's just get into the support and resistance levels. Okay, so this, I think we'll place our first resistance here. Okay, because it's a overlap level and this price has tested this level many times before. Next, I'll probably place my first support over here. Okay, and then I'll place an intermediate level here as well. So this is my intermediate support level. Okay, and now it's a support intermediate level because it's very close to where price currently is at. Okay, no, I'm gonna place my first support here instead. Okay, so if price reverses off of our first support, then we can go in for the buy entry. My intermediate resistance is here instead. Okay. This is purely graphical, so it's just by looking at the charts and looking at where exactly price has tested the levels before. So after we do this, then we go in with our Fibonacci levels. Okay, so the easiest one to identify is the retracement. Okay, so once again, retracement, we use these 5 levels. Okay, so even though our 50% lines up with my second resistance, as well as my 61.8 lining on my first resistance, is no longer valid because price has already broken those levels. Okay, yeah. I might just keep the 78 for reference. So we can place it here instead. Okay, at these swing highs here. Okay. Now if we zoom in, I think I see another Nike tick shape here. So I'm gonna pull out my 127.2 and 161.8. Okay, and we see that okay, I'm actually gonna move our intermediate level to these three swing highs here. Okay, in line with the 161.8 because price has already broken the 127.2 as you see here. Okay, so you can see it's really the first support and resistance placement is purely graphical. We go in and adjust it later on. Okay, my 78.6 lines up with my first support. Oh wait, this is no longer valid because price has already broken out of it. Okay, let's see what else we have. Maybe if we take this big shape here. Okay, my 100% lines up, even though the 78.6 did line up earlier as you saw, but price already broke it. Okay. Okay. So we're going in with a buy towards our level over here. Yeah, towards the 161.8. Now let's take a look at some indicators. Okay, price is moving above our Ichimoku cloud, so it's giving us a bullish signal. MACD is also giving us a bullish signal, so all of these support our analysis. And let's see. RSI isn't really telling us much. Stochastic is giving us a bullish signal as well. Maybe let's look at Bollinger as well. Okay, we can kind of see Bollinger breaking above the upper band as well. So it is also giving us a bullish signal. Okay. Okay. We have a request for AUD. Okay. Oh, the Aussie dollar is on a weekly time frame. There is a downtrend, but in recent times it looks like it's been going up. Let's look at our daily time frame. Okay, it looks like it's going up as well. And for our time frames, we saw also looks like it's going up. Okay. Let's see if we have a trend channel first. Yes. Okay. Now let's go in with our support levels. Here's my first support, and then second resistance maybe over here. Okay, just here. Okay, now let's go in with our Fibonacci levels again. So here I'm looking for retracement. Okay, I see my 61.8 lining up with my first resistance. Remember, even though this 50% lines up, it's no longer valid because price has already broken out of it. Okay, 50%. Oop, 61. Yeah. And then okay, there is a slight kick shape over here. So let's see if we have any levels. Okay. Okay, but price has already broken these levels, so it's no longer valid. Okay. Okay, I don't think we have any other levels here. Yeah. Okay, so let's just go in with our indicators. Okay, so same thing, Ichimoku, MACD, both giving us bullish signals here. If we look at RSI, RSI isn't really telling us much. Let's look at stochastic. Okay, not really telling us much as well. Let's look at Bollinger Bands. Okay, we see we do see price breaking above the upper band. Okay, so it does support our analysis. Let's look at our moving averages. Okay, I'm gonna hide our Bollinger Band so it's easier to see. So we see price moving above both of our moving averages, but it does look like it's moving below now the simple moving average. Okay, but it's still moving above the EMA, so that's fine. And price hasn't crossed over each other yet, so that's still fine. Okay. So we are seeing some resistance over here because of the Fibonacci this Fibonacci level, but we're still expecting it to continue to rise up towards our second resistance following the upward trend and still moving within this ascending trend channel. Okay. Okay. Shall we look at WTI? Okay, so on our weekly time frame, prices are kind of ranging. Yeah, there's no clear trend here. On our daily time frame, it does look like it's dropping. For hours, looks a little bit, I don't know. We do have this price breaking out of this ascending trend line, or rather descending trend line. Okay. We do have price breaking out of that. Yeah. Let's see if we have a channel. No. Okay. So we're just gonna continue our analysis and then we'll see what our Fibonacci levels tell us. Okay. So firstly, here we have our first resistance. Okay, I can pull back my first resistance. Next I have a second resistance, which is just here. Can pull it back. Okay, second resistance, and then lastly, first support maybe just here. Okay, so let's see if we can pull any of these levels back. Okay. Okay, here. First support here. Now let's go in with our Fibonacci levels. Okay, firstly is my retracement. Okay. Okay, my 50% lines up and okay, my 23.6 as well as 38.2 line up. So let's just keep those. Okay, and then I also have this flash shape here as well. Okay, so we can go in with our projection. Okay, and we can see that my 61.8, ooh, okay, we can see that my 61.8 lines up with my second resistance. Okay, but that's no longer valid because price has already broken it. So let me remove that. Okay, I think that's all the levels that I can identify so far. So let's go in with our levels again. So Ichimoku is giving us bullish, MACD is giving us bullish. If we look at RSI, okay, it's also moving in this ascending trend line, so it's also giving us bullish. And then let's look at Bollinger Bands maybe. Okay, you can see price breaking out above the upper Bollinger Band as well. Okay, so that is a bullish signal as well. Okay. For this chart, I think confirmation would be if price manages to break above this first resistance. So because you can see our first resistance is a pretty significant level. So we will be seeing some resistance over here like have seen in the past. So if we get and we also have this 23.6% Fibonacci retracement that lines up with it. So if price manages to break above this level, that's confirmation that we can go in for buy towards our second resistance. Okay. Okay. Okay, someone requested for DXY. Okay, this will be our last chart for today. I think that'll be all the time that we have. Okay, so on our DXY, we see prices dropping. I think we have a descending trend channel here as well. But you can definitely see a downtrend here. On our daily time frame, also there is a downtrend, and then on our 4-hour time frame, we don't have any trend lines or trend channels, I think. Let's try. Okay, no. But we can all agree that it is a downtrend. Okay. Okay, so then let's go in with our resistance and stop loss levels. So first resistance will be here. Can we pull it back? Yeah. Okay. So our first resistance will be there. And then first support. Okay, and so our stop loss would be roughly about here. Okay. Okay, now let's go in with our Fibonacci levels again. So you can see it's pretty methodical. Mm, okay, 50% lines up, my 50% is no longer valid. Okay, so my 61.8 lines up. Okay. Over here, 78.6 lines up, and so that's my 100%. So let's just keep that. Okay, and I think that all the levels that we have. Okay, I have a 78.6 there as well. Okay, and I have an inverted Nike tick here. So it's like this. Okay. I think that's all the levels we have. Yep. Okay, now let's go in with our indicators. Okay, price is moving below the Ichimoku cloud, so it supports our bearish signal, MACD as well, and RSI and stochastic. Okay, stochastic is moving in this descending trend line. Oop. Okay, whereas our RSI, oop, let's see. Okay, RSI is also moving in this ascending trend line. So pretty bearish signals here. Bollinger Bands also moving below the lower band. Okay, you can see that here. So also supports our bearish signals. So we would get confirmation in this case once price breaks out of this first support, because our first support is a pretty significant level again. Okay, it's a pretty significant level, and we also, in this case, we have two Fibonacci levels. Okay, yeah, we have two Fibonacci levels, which means that it's a confluence area, which typically would have a bit of resistance in that area. So we are seeing price bounce off of this level. But because of all the downward pressure, we would expect it to continue downwards towards our second support. Okay. 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 Okay, we have a question. How much do you calculate the stop loss and take profit? So it typically is the general rule for risk reward ratio is about 1 to 2. So you would use a factor of 1.5 for determining your stop loss target. I personally don't calculate based on that. I would calculate based off of the confluence areas as well as the levels, instead of having a fixed number of pips between our stop loss and take profit every time, because for each chart it's different. So you can't really apply um, the same number for each chart, if that makes sense. So I would just follow this rule where we, over here, okay, where after identifying the resistance area and the take profit and stop loss levels, or the confluence areas, whatever you have identified as a significant area to take note of, then I will go in and place my stop loss beyond it and my take profit before any major resistance area or confluence area. So I typically will follow this instead of the usual risk reward ratio. Yeah, but if you are interested in that, yeah, I think we have other webinars about risk reward ratio as well. Okay, that's all the time I have for you guys today. Thank you guys so much for joining me. I hope you guys found this helpful, and I will see you guys next week. Have a great rest of your week, everyone. Bye.